If you're new to investing, crypto probably seems chaotic. Prices move fast. Everyone has a different opinion. And the advice, it's either too simple or too complicated. But there's something happening beneath the noise. Some investors are making money by buying into crashes, not random crashes. Very specific ones. The kind that happen when early investors are finally allowed to sell. It sounds risky, but once you understand why the price is dropping, it starts to look like a pattern and a strategy you can actually learn to use. Because this approach, while it seems dangerous, is helping investors buy into real tokens at deep discounts, right when others are panicking and dumping their bags. In crypto, many tokens launch with a lockup period. Early investors, like venture firms or core team members, receive tokens but can't sell them right away. Eventually, that lockup ends. The tokens are unlocked. Suddenly, millions of coins can hit the market. This creates a supply shock. If demand doesn't rise at the same time, the price drops. That dip doesn't always mean the project failed. It may just be mechanical, the result of a scheduled event, not a change in fundamentals. To new investors, it looks like collapse, but often people aren't selling because they want to. They're selling because they're finally allowed to. Some of the worst token crashes happened after these unlock events. Apecoin, Immutable X, Galaxy, all dropped when large amounts of supply were released. Some never recovered, but others did, because unlocks don't always signal the end. Sometimes they're just a reset. That's where the strategy comes in. Some investors track unlock schedules ahead of time. They wait for the dip, not the hype. When the panic sets in, they step in. If the fundamentals haven't changed and the sell-off is just unlock pressure, it can be a strong entry point. Here's what that looks like at its best. A solid project is approaching a major unlock. You've done your homework. You know how much is releasing. You see that the team is still building and the community is active. Unlock hits, price drops, sentiment flips, but you're ready. You buy when others sell. Over the next few weeks, the panic fades, supply stabilizes, and the price recovers. This isn't guaranteed, but when the setup is right, it gives you an edge. And if this is helping you look at crypto differently, subscribe to Wealth Hacks. We focus on the mechanics of real investing, not just price predictions. Let's go a layer deeper. Not every unlock is equal. Who receives the tokens matters. Tokens going to VCs can create different effects than tokens going to the community. The size of the unlock also matters. A 5% unlock might not move price. 30% almost always does. You also need to read sentiment. Is the project active? Is development ongoing? Is there still volume? If a project is already weak, an unlock might break it. But if the foundation is strong, the sell-off might be temporary. This strategy is about context and timing. There are tools that help. Token unlocks, DeFi Llama, even project white papers. Track unlocks in advance, watch wallet activity, understand who's getting what and when. This strategy isn't just theory. Some investors used it during the Solana collapse. When forced sellers unloaded, others stepped in. Solana was trading below $10. Others bought Arbitrum after its unlocked dip. It rebounded by over 50% soon after. These weren't random bets. They were structured entries based on timing and data. This behavior also exists outside of crypto. In traditional finance, insiders face lockups after IPOs. When those expire, they sell. The stock drops. Some investors wait for that exact moment to enter. Tax loss harvesting works similarly. At the end of the year, investors sell underperforming assets not because they've lost faith, but to claim a tax benefit. That selling creates a temporary drop and a window to buy. If you want to learn how to use tax loss harvesting to your advantage, watch our video on turning paper losses into real tax savings. Here's the point. A strategy might look dangerous on the surface, but if you understand what's actually happening, it can become a tool. Buying after an unlock isn't always risky. Sometimes it's rational. You're not guessing, you're responding to timing, and you're letting others exit while you enter with intention. And when it works, you're buying low while everyone else is reacting emotionally. If you want to see how this kind of pattern plays out in the worst way, watch our next video. We break down what's happening with the most famous meme coin, Trump, to explain exactly how rug pulls work and what you need to do not to get caught in one.